Have you met Bunty? No? Let me introduce him to you. Meet Bunty, young, ambitious, working professional in finance. He is dreaming of that big promotion. And guess what? He's almost there. His boss just told him, Bunty, once you clear your CFA exam, the promotion is yours. Bunty is happy. He rushes to register for his exam. CFA fees of $1,250. Early bird window is closing in 3 days. Uh, Balance 297.50. Now you must be wondering why. Because Bunty had recently gone on a YOLO trip and spent as if he's a cousin of a billionaire. Now Bunty panics. No CFA fees is equal to no promotion, is equal to no car, is equal to no Bunty, sir. Hey folks, Rachana Ranade here, and I welcome you all to a very important video which is about funding your short-term goals. It is quite possible that like Bunty had to fulfill a short-term goal and like he had to, crunch in some money only as a stopgap arrangement, you also might have faced such a similar situation. Now, in such cases, what many people resort to is something like a personal loan, which may go up to as high as 24%. So, in today's video, we are going to understand about something which is called as an LAS or LAMF, which can be a great alternative. Now, along with the basics, we are also going to cover something like top 5 key features of LAS and LMF. We are going to talk about top 5 key concerns, and along with that, we are also going to talk about eligibility and how to apply for such loans. Now, first and foremost, let's understand the simple example or simple meaning of what is LAS and LAMF. LAS is what? Loan against stocks. And LAMF is loan against mutual funds. Now, I'll explain this entire concept with the help of a simple example. Okay. Assume that here is a person and this person needs some money. Like Bunty needed money for his CFA exam fees and he needed it for a very short time. Similarly, this person needs money only for the next, let's say, 10 to 12 days till his next salary gets credited. Okay. Now, what option does he have? Personal loan. But he's saying, I don't want to pay such high interest. Instead of that, what can he do? I'm going to give you an alternative of LAS here as an example first. Has he invested in some stocks? Yes. Assume that he has an account with Zerodha and in his holding, he has few large cap stocks. Now, what can he do? He can keep these stocks as a collateral with whom? With an entity who is going to give him the loan. Let's take an example of a lender on small case. So the lender will give him a loan when he keeps these stocks as a collateral. Now, when I say that he is keeping these stocks as a collateral, what happens is that now he will not be eligible to sell his shares unless and until he repays the loan. So it is as good as when he keeps the stock as a collateral, the key is with whom? The key is with the lender. And when he repays the loan, he will get the key so that if he wants, he can sell the shares. Okay. The same example like loan against shares can be converted for loan against mutual funds, where instead of securities, instead of stocks, he will keep the mutual funds as a collateral. Now let's understand about some key features of LAS and LAMF. What is the first and foremost point? I love this. You can access funds without selling your investments. Now let's take an example. You have invested in some stocks. You believe that because of XYZ things, you have done your fundamental analysis, you have done your technical analysis. And if you feel that this stock can potentially go up, now it would have been such a pain if you were required to sell these stocks and then get that money. Instead of that, if you're going ahead with a loan against securities or loan against stocks, in that case, the stock holding remains with you. So that's the best part. You can get access to funds without selling your investments. Second one is lower interest rate. As I mentioned, it is definitely lower as compared to personal loans. Third thing is credit line functionality. Very important. What do I mean by this? This is like an overdraft. Means what? You can take the loan for that security. So basically what you do, you keep stocks, you keep mutual funds as your collateral. Okay. And you get a limit from them that you are eligible for XYZ rupees. Unless and until you actually withdraw that money, you will not be charged any interest. That is why I'm saying that this is like a credit line functionality. You will be charged interest only on the amount that you withdraw, right? Next one, again simple, it's 100% digital and paperless process. So it's as good as you need some very basic points like your Aadhaar card, PAN card, your phone number. So no hassles per se, right? Moving on with the last point, top up your loan. Now what do I mean by that? If I wanted more loan, what can I do? I can top it up by adding more stocks, by adding more mutual funds. So if my portfolio value goes up, obviously I'll be able to top up my loan. Okay, so I hope you have understood about all the basic or key features about LAS and LAMF. In the next section, we'll talk about few more important details. First, let's do it in a nice tabular format. LAS versus LAMF. How much loan amount can you get? Minimum loan amount that you can get is 25,000 rupees and maximum is 5 crore rupees. For LS it will be for eligible securities and for LAMF it will be for eligible funds. Now what do I mean by that? I'll take a simple example. Assume you have all penny stocks in your portfolio. In that case they may not be eligible securities. In that case, even though your portfolio might be whatever 50 lakh rupees, 60 lakh rupees portfolio, you may not be eligible to get a loan against those securities. That is the reason why we have put that small star mark and we have said if it is for LAS, it will be eligible securities, and if it is for LAMF, it will be for eligible funds. Simple. What is the LTV? LTV is what? Loan to value ratio. Value is nothing but value of your stocks. Against that value, how much loan you will get? So it is 45% for approved stocks and ETFs. Just as a simple example, assume you have stocks worth 10 lakh rupees. 10 lakh rupees ka 45%, which is 4 lakh 50,000. That will be your eligible loan. That is your loan against your value. And if I'm talking about approved debt ETFs, it will be 75 to 85% of your value. So in the same example, assume your debt ETF is worth 10 lakh rupees. In such a case, your loan amount could be around 7 lakh 50,000 or 8 lakh 50,000 rupees in that range basically. Okay. And if I'm talking about LAMF, the 45%, 75 to 85% remains the same. But instead of stocks and ETFs, I'm going to use the word equity mutual funds. And instead of approved debt ETFs, I'm going to use the word debt mutual funds. Simple. See, the logic is also clear. For equity, because the risk is shade higher, your LTV is going to be lower. And for debt, because the risk is comparatively lower, your LTV is going to be higher. Okay. What about the interest rate? Interest rate could be in the range of 10.5% to 10.9% per annum. Of course, only on what? Only on your outstanding loan amount. Again, very important. That is why I told you this is like an overdraft, correct? There's a processing fee which is 999 rupees or 1% of loan, whichever is higher, plus GST. Okay, so they are very transparent about this. There will be a processing fee. They've also very clearly mentioned what is the processing fee along with GST, right? Now, what is the processing time? That is the important point of difference here, because if it is an LAS, loan against security, your processing time will be it will be processed by 12 p.m. of the next morning. So you will have to wait for some time before your loan amount actually gets credited in your account. So I'm repeating one more time, it's 12 p.m. of the next morning. But what about loan against mutual fund? Here processing time will be only within 2 hours. Okay. Ultimately, what is the loan tenure? It's 3 years, and very, very important, no early repayment charges. For example, if I'm talking about Bunty needed money only for whatever 10 15 days, unless till his next salary were to get credited. So can he repay early also? Yes, and best part is there are no early repayment charges, right? What about the repayment? Principal is flexible. You can pay any time, you can pay any amount. But if it is about interest, then interest will be auto debited on a monthly basis. Again, I'm repeating, this is like an OD facility, overdraft facility. So do you have to pay interest every single month? Answer is yes. But what about the principal? That repayment is flexible, anytime, any amount, whatever you feel comfortable. But as I told you, ultimately loan tenure is how much? 3 years. Now let's focus on the top 5 key concerns. The first one is impact of market fluctuations. Now let's take an example that you hold Reliance Industries Limited shares worth 1 lakh rupees. Now typically at the time of taking the loan to value ratio is 45%. So in this case, eligible loan will be how much? It will be 45,000 rupees. Now let's assume that there is some negative news on the stock because of which the stock goes down by 20%. Now what will be the new value of Reliance holding? That will be 80,000 rupees. Now here comes a good part, that small case saves its customers from market movement by introducing a 5% buffer. So here the LTV after taking the loan becomes 50%. So in this case, what will be the LTV now? It will be 40,000 rupees. Okay. Now what will happen? Original LTV while taking the loan was 45,000. Now it is 40,000. So in this case, user will have to repay 5,000 rupees. But be very sure about this fact that small case will notify you in such scenarios. It will never come as a shock. Okay. You will get a notification for that. There are I'm coming to the next point now. There could be multiple questions in your mind. I've just tried to gauge what could be the different questions, and I'm trying to answer those, right? So the next question is, what if a dividend is declared, or what if bonus shares are declared while you have pledged the shares as a collateral? Will you get the benefit of that or not? Answer is obviously yes. Any gains, be it in the nature of dividend or in the nature of bonus, you will be eligible for that, because ultimately the stocks are in your own portfolio, they are in your own holding. That is the reason why you will be able to get all these benefits, right? Next one is, can I sell my holdings while you pledge them? Ideally, answer is no. Why? Because if you remember, I told you it's as good as your portfolio is under a lock and key, and the key is with whom? Small case. So remember this. Can you pledge your holdings? Can you pledge your holdings? Yes. Can you sell your pledged holdings? No, unless and until you repay the loan, you will not be able to sell the portfolio. Okay, especially the pledged portfolio. Many people also have this question that, will their CIBIL score get impacted for eligibility check? Answer is again no. If you are checking your eligibility, eligible credit limit with small case, your CIBIL score should not get impacted. Final question again. Ideally, you should be able to answer this, but what if a person can't repay? In such a case, of course, you have a risk of losing your holdings, because ultimately, please understand, the lender in this example has given you a loan. If you are not able to repay the loan, they will have no choice but to sell off your holdings. But again, understand, they will be doing this only if you consistently fail to manage your loan after multiple notifications. And notifications will be for what? To make a payment for, let us say, a bounced interest or credit limit excess utilization or something like that. Okay, so be sure of the fact that, again, same things, it will not come as a surprise. You will get enough notifications, and then only, if you're still not able to repay, then you will have to lose your pledged stocks or pledged mutual funds. Now let's move on with the loan eligibility, that is, who can get a loan from the lender through small case. There are very basic pointers here. Number one, has to be an Indian citizen. If I'm talking about the age, it should be somewhere between 18 years to 70 years of age. Third, you should have an active PAN card which is linked to your bank account. Okay. Fourth, again, extremely important. I've already told this to you. But if you are applying for a LAMF, loan against mutual funds, you should have eligible mutual funds with you, right? And if I'm talking about LAS, you should have eligible securities with you. But here it is very important. You should have these eligible securities in your Zerodha Demat account only. Okay. Ultimately, one final point, that if you have already pledged some securities, can you repledge them again with small case? Answer is no. So securities which are under lock-in or which are already pledged, these securities will not be eligible for this offer. Now we'll try and understand as to how can you apply for LS or LAMF and how can you manage it. Steps are extremely simple. First and foremost, download the small case app. Now you should navigate to the credit tab. Okay. Once you do this, check your available credit limit, and for that, what you'll have to do, you'll have to provide your PAN and the phone number linked to your Zerodha or your mutual fund account. Okay. Now you'll have to just select the amount that you wish to withdraw. Of course, you will have to complete a simple KYC verification, and for this, you will have to have a digital verification using Aadhaar. Once you do that, you need to add a bank account to receive the funds, set up an e-mandate for monthly interest auto debits, pledge your securities, sign the online loan agreement. All right. And then that's how you just go to your loan dashboard, and that's where you can manage your entire account. If you can see, you also have the repay amount button on the loan dashboard. So that's how it is easy to apply for the loan and even manage this loan. I hope you understood two key points in today's video. Number one, for short-term needs as a stopgap arrangement, LAS and LAMF can be a good alternative to personal loans, which typically come with higher interest rates. And second, your investments continue to compound as you keep holding them. Please don't forget to smash the like button. Please don't forget to share this with your video with your friends. I'll see you in the next one. Till then, take care. Jai Hind and bye-bye. You might have come across such advertisements on various social media platforms. Please note, all of these are fraudsters promising unbelievable returns through stock tips. I don't provide any calls or advisory services. I provide only educational content through my social media handles and through my website rachanaranade.com and rachanaranade.in.